Ladies and gentlemen, Keiki here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is up about 0.8% there. On the S&P, Nasdaq is up about 1%. Semiconductor 2%. Dow 1, Russell 2000 also made a move with a 1.7% positive. Transport did the same. Banks is also up today. Energy is the only sector with a negative print, 2% on the energy sector there. Biotech is pretty much flat. Healthcare up, home builders up, utilities flat. Retail made a move here, 3% positive. Looks like emerging market is up about 1% there. Bitcoin is 3. Gold, silver, miners. Looks like silver and miners did make a move. Gold being up about 0.3% there. Dollar slightly up. Oil down. Treasury bond down. VIX is down about 6%. Let's stick with S&P 500 ETF. Spider. 65-minute chart here. So this is where we closed yesterday. And it looks like we opened up. We slightly gapped down here. So you can see we gapped down slightly. A little bit of fluctuation on the first hour. There was a spinning top candle there, right on the short-term moving average and the micro-term moving. You can see we've been talking about these two moving averages this entire week and late last week. And these moving averages were the moving average that we need to keep an eye on for coming into this week. And looks like you can see that how my micro-term, that's that, and my short-term moving averages, they were colliding in that vicinity. It's kind of like a double support right on there. But you can see that on that first hour through that spinning top. And then the second hour, buyers utilize both of my short-term and the micro-term moving averages, prop itself up, and that's third hour, and that resistance there, which is what we've been talking about. You know what I'm going to do? I'm going to actually put this right up here, right? You can see how that 450 area been acting as a resistance this entire week. I mean, really, last 2 days, but you can see every single hour, bulls were not able to get above that level. Even like on the last hour here, so you can see on the fourth and fifth hour, a little bit of fluctuations to the downside. And then on the fifth hour, bulls made a move. However, there's an upper wick there, and bears were making sure that you don't cross that line. Because you know what bears don't want to see, right? What bears don't want to see is that bulls closing close to this gap area and gapping it over. Because if we see something like that, well, the game could be over. I'm not sure game will be over for the bears. But if we see, let's just entertain ourselves a little bit here. I wonder how much of a gap from here, just at this level, right? 450.90. Yeah, to gap it up, there will be 1.5% gap up. When was the last time we've seen anything like that? We haven't seen gap up that big. So if bulls want to pull some kind of a miracle here, turn this into an island bottom, they need to see a 1.5% gap up tomorrow morning. And I think, obviously, anything is possible in the market, but it's just probably unlikely scenario. But if we do see something like that, bulls are up to something. Bulls are pulling rabbit out of the hat. So I think, I'm going to give you that strategy for both bulls and bears. What bulls need to do, maybe getting up here for tomorrow, right? Maybe close right here. Let's say if they can do something like that. So let's say 454. They close at 454 and then gap up about 0.8%. I think that's manageable, right? That's manageable. That was the best case scenario, because the reason why I'm suggesting a gap up instead of, bulls just getting up and filling this gap is that this is a rather large down gap. So if bulls go up and fill it, inevitably, if that level is going to act as resistance, they want to come right back down. And the problem with that is once this thing starts coming right back down, is that we have another down gap up here. So bears are really gonna push it down. And you can see my midterm and long-term moving average, all averages on that vicinity, along with that gap resistance. So just going up and filling this gap is not gonna scare the bears at this one. That's what I'm suggesting. I'm proposing if bulls wanna see more smooth, kind of like a surprise attack, is gapping up, right? And today's Tuesday, so you can go up here Wednesday and then gap it up on Thursday. That was the best case scenario. For bears, obviously, we need to make sure you guys break this short-term and the micro-term moving average, right? You can see how bulls are building something here, and bears can kind of see that, right? Bulls are not just hanging around just for the sake of hanging around. They've built this right here. And this is not something you should take it lightly, because trend gets developed and established in this way. With a small trend like this, higher lows and higher highs, that can lead to, I mean, this is a short-term trend that could lead to a midterm and the primary term. Considering the fact that we're still in the primary and the long-term uptrend for the buyers, right? The big picture favors the buyers. And while we're dealing with, midterm downtrend, right? Since really the start of new year. You see that? This is a downtrend we're talking about. That's a midterm downtrend, while bulls are working with the short-term uptrend. And bears weapons are these two down gaps, my midterm moving average, and the long-term. Bulls don't have any gaps. However, they got the micro-term and the short-term moving averages and the higher lows and higher highs. So this is a crucial level, as you can see. So bears need to make sure that bulls can't utilize those short-term and the micro-term moving average no longer by gapping it down. Because you can see how it's been acting as support last couple days. Though it's been acting as support last couple days, if we talk about per hour basis, look and see 1, 2, 3, 4, 5, 6, 7, 8 hours of support there, right? So you do not want, if you're a bear, you don't want bulls to start to regain that confidence. Because if you do, you know what bulls are capable of. You've seen what they can do last couple years. So don't dispute the fact that we're in a bull market, ladies and gentlemen, while the bears are threatening the bulls with those two down gaps. Let's check out that oscillator and see if we can extract any more information. So that oscillator is elevated. I thought there's a cross here, that whipsawing action. So, but bulls kind of managed to bring it back up. So we got this. I don't know the last time I've seen the oscillator on the 65-minute chart with this kind of a look here. So what we're seeing right now is that oscillator, because look at this. The price has been moving sideways, right? The oscillator has been what? Moving up. It's advanced. So though we're not seeing very confident look like this, oscillator is favoring the buyers at this point. So if we see a thrust to the upside, if bulls make a move, you will see this oscillator getting up here. And once the oscillator gets up, once the bulls find that confidence one more time, they are capable of filling both of those down gaps. So this is a crucial level for the bears. You don't act quickly right now. Bulls are cooking up something here. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening. Good luck trading tomorrow.